Typically, by the time I hear something is a good investment decision, it's already too late. It's fully valued. Is ESG fully valued or even overvalued right now?
I take a little bit different attitude toward it. I think it's absolutely directionally correct. And I think it's very, very hard, I think, to get a consistent definition of if someone says they are, ESG compliant. So it's absolutely the correct thing to do. If you look at the energy sector, for example, it's a no-brainer to separate coal from other sectors of that market. But when you get to areas like governance, I think it changes by country. Is it the same criterion in China as it is in the US? And it can also change by, are we talking about the board? Are we talking about the executive? So I think there's more work to do here. There was a tremendous amount of money put into passive ESG funds in Europe over the last year, a tremendous amount. And I think this is an area where we're going to see more specialists come in and more active managers with a little bit more of a clinical definition of what this means.
Afsane, from the first moment you were on Wall Street Week, you were talking about ESG and you were talking about why it's a smart investment. How do you address the issue Bob raises, which is how do you know what's ESG and what isn't? Is there any standardization? How do you make sure these companies are doing what they say they're going to do?
So, David, I would first start with do no harm. So companies that create harm, whether it is to the environment or to labor or, use child labor or are not taking into account the kind of pollution they're creating and putting into the soil or into their environment, I think that's the harm and that is measurable and somebody has to come and clean it. And what we've seen is the huge cost of cleanups that we see every day, right? In the US, of course, we read horror stories in China. The pollution levels in India is making everybody sick. So these are very hard measurable things. And so I think that that's the negative side. The positive side, obviously, there is a lot of greenwashing, there's a lot of marketing, there's a lot of talk about ESG. But I think one of the things that is very positive is that not only people who've been investing in impactful and sustainable type investments as I have and as we have, are talking about it, but all of a sudden, really in the last 12 months since COVID, a lot of mainstream investors who did not particularly talk about climate before are seeing, as we saw, for example, with Exxon this week, that there is a longer term vision for Exxon, which does not include investing more and more and more in hydrocarbons. And it is actually not productive to its value to be investing the way Exxon was investing. So, that was the really big change and shift so that mainstream investors are now talking about the same things as early ESG investors.
So, Bob, what about that Exxon phenomenon? Was that potentially a turning point here? Is it sort of a democratization of at least the environmental part of ESG, where it's going to be taken out of the hands of management and given to the shareholders and to the public at large?
Listen, this was a tremendous acceleration of some trends that, as Afsane has said, her firm and others have been practicing for a while, but it's accelerated. Like so many trends during the COVID period, we've seen a significant acceleration. I think this was a huge surprise, David, to a lot of people, how far this went and how quickly it went. And so absolutely there'll be implications of this to I would say reinforce the acceleration that we're seeing in this space. And I think to Afsane's point, appropriately.
So, Afsane, let's come back to you because you always have had a basket of ESG as opposed to the rest, as I recall. Are you still seeing the same level of overperformance, or is that getting competed away?
So I think this year we saw, obviously, energy prices go up. And I think that the ESG stocks are still competitive, not as big a bump as you saw last year. But I think what is interesting is what will happen as we go forward, right? So you're going to see oil and gas companies having to shift their policies. They're going to have to spend a lot of money to be shifting their policies versus companies that are investing in, let's say, retrofitting a natural gas plant to use hydrogen or EV charging, which is going to be huge. And other related areas, whether you talk to your friends, they're putting in geothermal or they're putting solar plants in their houses. So it's becoming something that is very common in every household, in every business. And I think the Exxon story for me was particularly interesting this week because you had Engine One, which happens, where the founder is one of the most experienced people in the equity markets that come from Partners Group, team up with one of the smartest investors who came from China and who was very interested in impact, come together, but with a tiny holding of less than 50 million or close to 50 million, managed to move this stock. All the news are about Engine One being very thoughtful and sort of pushing this. But what has been interesting to me is also, of course, you heard Tom DiNapoli, the controller of New York State, who had been very, very active on the climate side for years, who was very active in the case of Exxon and other companies as well. What was surprising is let's say BlackRock, which owns 6% and did vote. You don't see that in the headlines. Yeah. And I was wondering, still talking to a lot of people to see why it hasn't been in the headlines despite its statements. And I don't know if you or Bob have any thoughts.
Well, let me be impertinent here and get a little personal. Larry Fink is not shy about publicity, Bob. Why is that?
I think this is the first I really thought about it that Asana brought it up, but I think it reiterates that the sell side needs to catch up with the buy side here.
It's fascinating. And finally, really briefly, Bob, do we need the government to get into this to really set some rules?
We've seen a good acceleration over the last year. I think there's a lot of action here. So I think the trends are in the right direction, as I said, directionally appropriate. Yeah. I think there's a lot of things to sort out in terms of definitions and, as I said, the sell side catching up with the buy side, but let the market forces, as they did this week, or as Afsana pointed out, let the market forces work for a while.
Okay, Afsana, absolutely last word. You're a big investor in this. Would you like the government involved?
Well, you do need to have some sort of pricing. So, we're already assuming like a 35% carbon tax, whether there is one or there isn't. So whether it's Gary Gensler, whether it is Jay Powell, whether it's somebody in the government will have to get more involved. I think there's a lot of interest. So we'll see what happens.